Hey everyone, I'm Kyler. Just wanted to share with you guys a little bit of my thoughts on the current market and specifically on a company that you guys probably all know, Apple, and its current position in the market as there is tons of earnings reports going on, along with a Federal Reserve meeting just the other day. So I wanted to give you guys a little bit of color on how I'm thinking about one of the largest companies in the world. Great to have you guys here today. I'm really excited to get into it. So first, I just wanted to share with you guys a little bit of my thoughts on Apple currently. So today, Apple reported its first quarter earnings and they beat estimates for revenue and earnings. As you guys can see, they beat them on earnings per share by about 3.6% and revenue by a little over 1%, which should in general be pretty good for the news. But as you guys are probably familiar with, the company is actually down after hours. The stock fell, giving a little bit of a weak outlook compared to what people were expecting. And right now the stock is down about 3% after hours. And so I wanted to give you guys a little bit of my thoughts on Apple and where it sits in the current market and how you guys can kind of think about this just from my perspective, what I'm thinking about here. This is definitely not something that you should invest or trade on. I just want to give you guys my thoughts as someone who is in the market all the time. So as you guys are all familiar with, Apple is one of the most beloved companies, honestly, in the world. If you don't have an Apple phone, I'm sure tons of people that you know do. And so giving a little bit of color on this and my perspective currently on it, I thought might be a little bit helpful. And as I dove into this, I was genuinely curious about how China was affecting this company because that played a big role in it being down after hours, where the sales in China were down about 13% year over year. And I found this quote that I want to share with you guys. It says, according to preliminary data from the International Data Corporation, China's smartphone shipments totaled 271.3 million units in 2023, which was a decline of 5% compared to 2022. This was the lowest volume in a decade, stemming from a soft economic recovery and weak consumer sentiment. So you guys know that a big part of Apple's earnings today was actually China having lower than expected sales and maybe forecasting a little bit of weakness going forward. But I wanted to put that in perspective with China's current market situation. And as you can obviously see here, it's down across the board. Apple is not the only one affected here. And so that might, I guess, be a little bit of a boost to the sentiment that you see around it that, hey, it might be down a little bit, but that's actually not uncommon right now with specifically smartphones when it comes to China. Now, I thought this was interesting that I found the global market, smartphone market share broken down into all the different companies. And you can see the top two, obviously Samsung and Apple, and how they've performed 2021, 2022, and 2023. You can see that Samsung has been a little choppy in how much of the global market share it's actually taken up, going from 19, 23, 21, and kind of bouncing all over, sitting flat at 20. Apple, you can see, has bounced around just as much here, with going from 22 all the way down to 18 as Samsung kind of took share. And you can see that it's actually shrinking a little bit, which is certainly not a great sign for the company, but it gives you a little bit more color on what I'm thinking about. Now, when you're actually thinking about investing in companies, which is what you guys are here for, I focus particularly on cash flow and free cash flow. I think that's anytime you're investing in a company, that's what you should be focused on, is how much cash they can actually return to you. And that's what I really like to focus on here. So I wanted to look at particularly Apple's price to free cash flow. And you can see this all the way back from early 2000s to today. And you can see Apple sits particularly on the high end of this range here. A much better time when you're comparing price to free cash flow, in my opinion, would have been to buy obviously down here between 2010 to 2017, which is around the time that Warren was purchasing the majority of his shares, if I remember correctly. It was somewhere in this period right here where he purchased the bulk of the shares in Apple. He saw that it was mispriced. And now, I don't know that I personally could say that it is mispriced. With a price-free cash flow, in the mid to high 20s. I don't know if it's worth that. I don't know. It's hard to know exactly what the prospects of a company are. Apple has such a strong moat just in its brand, and it allows it to price things very differently than other companies. But I think sentiment might be turning slightly. Now, don't take this the wrong way. I don't think Apple's going anywhere anytime soon, but it does seem that sentiment might be turning slightly as we see Apple kind of hit a peak. Another thing that I did want to share, though, just to give you a little bit more picture, is Apple's margins. And I thought this was very interesting that you can see from around 2005 all the way up to 2010, 11-ish, that they have had very steadily rising margins and then kind of dropped off and flatlined all the way into around 2020 until they've jumped again, and you can see kind of a little trough and maybe headed back up. We'll see where that goes. I just thought this was interesting as you see a company like Apple that's maturing a little bit, I think, and maybe growing into higher margins. I think a company that's growing is generally going to be kind of pushing things a little bit and is willing to accept a little bit lower margin. Whereas a more mature company is always going to be focused on efficiency, growing this. Not to say in a growing company they're not going to be focused on net margin, but I think a mature company is a little more focused on that and squeezing everything out of what they have because they know that's the best opportunity versus growing, right? You only have so much that you can focus on to change really, really well. And so you want to focus on the best opportunity and avoid any losses, just an opportunity cost, right? If there was a company that had tremendous growth potential, but they were so focused on squeezing the last dollar out of their customers, it's not really a great trade. Whereas if you look at the other side, maybe a company that doesn't have great growth potential, but if they focus on efficiency, that probably means a lot more to them. They have more potential to grow there. So just a thought that I had and a little bit on my thoughts here. So overall, I do think Apple is a fantastic company that has a great future, but personally, I think that their price to their free cash flow right now is sitting on the higher end. And I don't think this is one that I would be interested in now, even with their drop after earnings. In the whole scheme of things, it is very small, and they probably won't be headed down much further just because they're such a quality company. But I think that they would have to fall fairly significantly for me to say I would want to own a piece of Apple because of the risk reward. I think anytime you're investing in companies, it's important to pay attention to opportunity cost. I've already talked about it. Compare your investment that you're thinking about making to the best investment you currently have. Let's say, for example, you have an investment that you feel like you understand really well and has a really reasonable chance at over the next 12, 24, 36, 48 months, however long it might be, of going up 50 to 100% in price. Now, if you've got another opportunity where you say, I'm much more unsure, this could be up 50 to 100%, but I'm not really confident in that, well, then your first one is a better option, right? I think anytime you have less confidence, that should be a really big hit to whether you actually make one or not, despite how much opportunity of growth you think you have. Because when you don't understand an investment, it's going to leave you open to a lot of unforeseen risks. And you want to avoid that as much as possible. So really understand what you invest in and always compare your next investment to the best option you currently have. Right? With that, hopefully you guys got a little bit of value out of this and got a little bit of an idea of my current thoughts around Apple and the market.